stocks continuing to slide after Friday's sell-off. Investors looking ahead to fresh inflation data out this week. Joining me now with more, we've got George Cipolloni, who is the Penn Mutual Asset Management Portfolio Manager. George, good to have you back on the program with us. You say the most important thing for investors right now is to know your fundamentals. Explain what you mean by that.
All right, Brad, great to see you again. And so my favorite quarterback right now is the Philadelphia Eagles, Jalen Hurts, and he always says, keep the main thing the main thing. And what that means for us as investors is to make sure you know your fundamentals, why your stock is going up. And so if you think about how a stock goes up, there's really three main components. It's your valuation, your sales growth, and your sales performance, and your margins. And most people lose track of that over time. They tend to just look at the price, but that price means something. And underlying, it means a lot. And let's just take Walmart, for example, that reported last week. They reported great earnings, but their PE was at 42 times. And so, again, you have to know why your stock is up and what components move that stock price up. And again, it all goes back to the fundamentals.
And so, number one, love the answer to the question here. And there is a lot that's intertwined within that, as well as my Eagles fandom there. So I appreciate that. And yours as well, I can see. But as we're thinking about building a portfolio, what is the number one thing that people need to keep in mind as they're keeping the main thing, and trying to understand how other stocks that they own within that portfolio or assets they own within that portfolio can move based on headlines out of DC or headlines off of an earnings bellwether like NVIDIA that's coming out this week?
You're right, Brad. And so there's a lot to handle, especially as an individual investor. Number one, I'm always a proponent of or an advocate of active management because that's what we do. And I think that's pretty important. So if you have good managers that can help guide you through that. The other thing is to obviously know your risk tolerance, to know what we almost say sometimes, especially as value investors, you almost have to choose your suffering, right? Because, our stocks have been left behind by these growth stocks over a number of years. But now we've seen a pretty big cycle rotation away from growth. If you look at the Mag 7 stocks, I think Apple has had a 5% drawdown. Tesla's had a 30% drawdown. These are some massive swings. You have to know as an investor if you can handle those swings and if you can still invest over time. Peter Lynch said the best way to do it is to just add a little bit every month, right? And keep buying. So, but you have to know your risk tolerance. You have to know, again, you're not going to know everything about the market as an individual investor. So you can rely on maybe some good managers on that other side of it. But again, knowing your risk tolerance is really important. People tend to make bad decisions when they're losing money. How
do you build the margin of safety into your portfolio?
It's important. So there's a couple different ways. Number one, the easiest answer is to just hold some excess liquidity, hold some cash. There's, if you look at Buffett's portfolio, for example, I think he has roughly 27% in cash right now, or T-bills, which is the most he's had in a very long time. That's one way to do it, broadly speaking. The other way to do it is on an individual sector or stock selection basis. So one of the things we like to build into each company that we buy is a little bit of a buffer. So that can be financial liquidity on the balance sheet of a company. So maybe if they have more cash than debt, for example, you don't have to worry about interest rates if they have more cash than debt. Or if you look about their margins, how sustainable have they been through a full market cycle? Again, these are very idiosyncratic. They're very specific to a company, but it is important, and you can build in margin of safety both through security selection and then again more broadly with cash.
How should investors be aptly navigating this environment right now where the Fed essentially has kind of taken the back seat, as we're not expecting to get a decision until later this year about not a decision about rate cuts. Of course, they'll have their meetings for the FOMC, but they're not expected to roll out a rate cut until later this year.
Yeah, Brad, it's a great point, because if we came into this year and you told me that by February we're not concerned about, or the Fed might be the fifth on the list of major concerns, we all would have been surprised, I think. So right now we are in a period of incredible uncertainty. The market's valuations, I think, are expensive on 19 of 20 factors, and now you have massive changes in policy. You have not just individual investors concerned, you have companies concerned. So one of the things we like to listen to are the commentary from Ford's GM, for example, who's very concerned about the profit hit from tariffs. And then if you look even further, the threat of stagflation might be here, where the University of Michigan study just came out, or survey came out, and people are expecting inflation to stick around for a while. And that's different too. So again, there's a lot of moving parts. going back to the margin of safety issue, it's okay sometimes to be cautious as an investor, and it's okay to be risky from a certain standpoint, and you have to kind of pick and choose sometimes when is time to go on and when there is a time to kind of take a step back. And I think right now with all this uncertainty, it's okay to take a step back, maybe look for some safer alternatives to stocks, and then just see what happens.
George, great insights as always. Thanks so much for taking the time here with us today.
Thanks, Brad.